Hey traders, welcome to Charts and Coffee. Happy Friday, everyone. Great to see you all. Got the free trading room in here. Great to see you all as well. All right, so we have end of quarter. And with that, we know we're going to see. Now, when I say shenanigans, gang, it's not bullish. It's not bearish. It's really just a matter of volatility and volume sort of magnetizing movement towards certain levels. So if we have enough volatility, we have enough volume at certain levels, we know these levels are likely to be in play. And that's what I look at on days like today. But even more than that, I tend to look at being very comfortable with not being particularly active in the morning or even particularly active on a short-term time frame, because it's not that volatility alone is a problem. In fact, volatility for us as traders is absolutely necessary. But it's the volatility that's going to push the upper end of price movement range. It's the volatility outside the historical norms that become a problem. And why is it a problem? Isn't more volatility good? It is when we can control risk. It is when it's within the normal parameters of what we usually see. So whether that's a PMR like I like to use, or whether that's an HPMR intraday, that's what you see on the 5-minute chart. Anytime we're pushing the validity of those kinds of levels, risk management becomes difficult. And you can see here with this data, which I got to tell you really wasn't that bearish. You might wonder, Rog, what the heck happened at this morning at around 8:30? So one of the easiest ways to determine what's going on is make a pit stop at the calendar every morning before you even start to look at the charts. So before the charts get turned on, before I turn on TradingView, before I even turn on Thinkorswim, I'm going to Trading Economics. I'm going to Forex Factory, and I want to be aware of those high impact, high volatility, hot zones, like we call them, events that are scheduled. And core PCE, this is the Federal Reserve's pet inflation number. This is the number that most of their models rely upon. This is the inflation gauge that they use. CPI, they'll pay attention to it. We know that's really the reality that we live in, but PCE is their inflation number. That's their favorite. And you can see here the initial reaction. We've recovered pretty much to where we were before PCE. Now, the next question that comes up is, Rog, why was there volatility? PCE ticked up just a little bit. You can see that expectations were for 0.5. We ticked up to 0.6. Now, what's really interesting is that we had a revision. This is where the balancing act happened. So the number that came out, 1/10 more than what we expected, but it's interesting to revise the previous number, the previous month. And you'll see it was revised 1 tick lower. I don't know what the takeaway of that is. I'm not here to understand what 0.6 really means when it comes to the PCE. We look at price. The initial reaction was lower. I can't say we sustained that weakness like we did with the CPI all those weeks back, but certainly a little bit more bearish. And we'll see, and we'll watch for the echo at 9:30. Remember, at 8:30, there's a limited number of market participants that can react to that data. Futures, of course, futures options, Forex. Come 9:30, stock and ETF options players now have the ability to express their opinion about the data that happened an hour back. So that's that echo that I talk about. All right. So now what we want to do is take a look at where we are in regards to the previous session close. I call that the line in the sand. We are below it on the indices, but we actually had an inside day yesterday. And right now it's so early, but right now we also have another inside candle. All right, gang. So let's get to it. Taking a look at what we have here in the market. And that brings us to, let's take a look at our first question. Hey there, Brian. And let me make this daily time frame a little bit bigger. There we go. Or not. Let's try that again. So our first question is, as I try to make this daily time frame a little bit bigger. I don't know. There we go. All right. How will end of week, end of month, and end of quarter affect today's trading? Brian, we're on the same brainwave. Volatility, the longer term time frames are going to be the easiest way to absorb what is expected to be larger than normal, larger than average historical volatility. That's what I would presume. That's what I've experienced personally over the years. And ultimately, I want to be very conservative about anything that I do today. Look, I think it's really important for people on this side of the mic and the camera to share what is a good trading day and what is generally a not so good trading day. And I mean, particular to this session, if I look back on and I'm talking dozens of non-farm payroll, dozens of end of quarter, and dozens of options expiration. Those 3 days for me tend to represent more risk than the historical volatility tends to plot. And because of that, it's harder to manage risk when we're moving in a way that's unusual to the normal characteristics of the market. So I avoid those 3 days. I will not day trade on those 3 days. I'll swing trade, I'll look at daily time frames, but I will typically not day trade, especially the morning for those 3 sessions. So it's not a matter of my knowing what's going to happen. It's about my acknowledging I don't know what's going to happen. And that is ultimately a risk factor. So thanks for the question, Brian. Good stuff. All right. Bill asks, what do I think about all these FOMC speakers? I think it's just going to add more volatility to a very volatile session, Bill. We've got Bowman, we've got Williams, we've got Brainerd right now on top of this end of quarter. So it's going to add more volatility, specifically at right now, 9 a.m. Eastern, 11 a.m. And then 4:15, not really going to affect us really as a futures trader or as a stock trader, but it could certainly influence how the Sunday open behaves with whatever it is that Williams is going to say at 4:15 after the bell. Hey there, Nick. How are you? Of the more commonly used trade setups, which setups do I think may be most useful ones for swing traders to be familiar with? Nick, I like trend following. My bread and butter, my favorite environment is going to be an uptrend. That's my absolute favorite environment, not because it's easy to be a buyer and buy and hold and nothing like that. The reason we all, for the most part, collectively love uptrends is because the psychology is likely the most predictable, the most reliable, that might be a better word, than downtrends, which can have violent short squeezes, and chop, where we don't have a dominant psychology. So I like to buy the dip in an uptrend. I mean, that has been my bread and butter. When we have a double green uptrend, I get to work. When I have that double green uptrend from index sector stock, I absolutely like to get to work. All right. Okay. Hey there, Sue. Question about Canopy and about GBTC. So the question, Sue, is a little bit less, if you don't mind me sort of extrapolating here. It's a little bit less about those 2 stocks. And might I request, look, let's be open to what it takes to understand validity for a trade, right? If we're in a position in a trade, we're wondering, should we take our losses? Why? Why now and not? And I don't know where you're in from, Sue, of course. So if you wouldn't mind, let's talk about risk, period, in any kind of trade, not just particular to those 2 symbols. Where did we get in? And what was the validity for that entry? And not, we were hoping it was going to go higher, right? But what was the validity? Was it an oversold buy, confirmed by a slow stochastic, maybe the ready aim fire? Was it a trend following buy to the upside, where we looked for support at the wave or support at the 200 exponential or whatever it is? That's number one. What's the validity for the trade? And at what point, at what price, at what level in the chart is that validity broken, right? And then we have to respect that level as where we say, okay, no more. The trade is no longer in a position where I can say it's justified to hold along. That's the answer, right? I don't know. I will tell you straight up, I don't know at this point what happens next with these or what would be the catalyst for something. I would say keep an eye on volume. At this point, volume is going to be your best friend. If there's going to be a turnaround, probably CGC is further along that transition because it's no longer in a downtrend. So GBTC is still in a downtrend. CGC is now transitioning to neutral. If we have, and let's take a look here, if we have a volume level that really preferably preceded the neutral transition or it's happening during the neutral transition, and you can see we actually have a point of control since June. What about since the beginning of the year? Yeah, your point of control. If we can stay above the point of control, which looks to be about 250, 260, that would be something you definitely want to keep in mind in terms of the validity of the trade going forward, right? Okay, so keep that in mind in terms of I can't be alone in my trade idea. Never. No trade that we have ever taken happened because we alone thought it was a buy. We and then people we've never even met before said, hey, you know what? We like this level for sometimes completely different reasons. But the reasons, whether they're technical, whether they're fundamental, whether they're macro, whatever the indicators are, the one thing that is the equalizer, the one thing that is the ultimate revealer of sentiment is volume. Because all those folks, if I were to ask everyone at 250, 260, why did you buy? If I had the ability to do that, I bet I'd have a dozen, if not two reasons, right? Dozens of reasons as to why that was a buy. But it creates the volume. That's why volume is such a powerful look. So that's what I would focus on there. And so thank you for the question. And thank you for, bringing up a really important part of trading, which is the risk side of it. All right. Next is Karthik. How are you? Do I see any oversold buys in the indices or potential fade or reversion to the mean type of trade? I won't look at that till Monday, Karthik. Yes, I think there are some interesting symbols that are neutral above the 200 exponential moving average and near support. I think there are a number of them, but it will make much more sense to look at them come October, which is next week. It will make much more sense to get through this volatility, this quarter, and look at the first 3 days of the new month. Those first 3 days are often very important days in terms of seeing flows either in or out. So I'll wait till the early part of next month. All right, Bernie asks, my ES short position almost got whacked by the PCE whipsaw, closed for one tick before, and that brings up a kind of exit that I call the eject button, right? Why do I call it that? Because it's not a technical reason. It's not a reason of price. It's a time-based reason. It is time to get out. Hit the eject button. And for a lot of traders wanting to manage risk, it does make sense to say, you know what? I don't know that I want to sit through non-farm payroll. I don't know that I want to sit through an FOMC rate statement. I don't know that I want to sit through the press conference or, to your point, the PCE. And that takes us full circle to, are we looking at the calendar and are we aware of when those eject button type times may be waiting? So Bernie, awesome. Darius, does the minor low pattern supersede bearish structure on the daily? I won't consider buys in double red. I will seldom. And so the first answer is succinctly, does the minor low pattern supersede bear? No. Easy answer. Will I from time to time be open to something like that? Rarely, but sometimes I will. And when I do, and I'm in the room with our traders, I make sure I'm very clear, crystal clear, that the trend is down, but there's an interesting reason. It could be a volume level. It could be a 200 exponential. It could be a timing. But normally I try not to do that. And when I sort of bend the rules on that, agro position sizing, usually options, so I can define my risk, worst case scenario. And it's a tight stop because we use the pattern itself for risk management. So thank you for the question. Sue says it was a couple years ago on Canopy and GBTC, trend buy newbie. Sue, we all make that trade. We all think, oh, this is the trade. It's heading higher. Need to get on this band. We've all done it. We've all done it. I've done it. Everyone in this room has probably had some semblance of that. But if we can now start to inject understanding validity, hopefully we're interested in stocks that are moving like that, but we understand how to control risk in a better way. So thank you for the follow-up. AEM. AEM. It's trying to get out of the downtrend. This is another example of either looking for, Sue, a 1, 2, 3 reversal. That's a Dow 1, 2, 3 reversal. The explainer on that is over at countdowntrader.com. www.countdowntrader.com. That's my blog here with Simpler. And my tools, my analysis, different trading ideas that are applicable to the way that I'm trading right now, videos, write-ups, they're all there over at Countdown Trader. Trisha's been handling that thing for years. It's a fantastic resource for what I do for Simpler members in terms of tactics and tools and analysis. And I will tell you, the 1, 2, 3 there, you might really like. But then I'll also mention what I was mentioning to the other Sue, is there volume accompanying this level? It's a little bit overhead. So this one's going to be a little bit, let me double check. Yeah. So keep an eye, see what the point of control is. We're just above it pre-market. It's going to be really important to stay above that. If 1, 2, 3, if a reversal, if the ability to start trending higher is possible. Okay. So thank you for the question. Zane says, I love volume analysis. It clicked with me. Me too, Zane. And, for me, it most intensely came around in 2008. And, for a lot of us, it was extremely emotional. It was extremely scary. And the best way that I knew to beat back the monsters was volume. Yeah, it clicked with me in a huge way. Intraday, swing trades, as well as my investing or my position portfolio. Absolutely. It supplements every type of analysis. I can't say that about everything, but there's 2 things that will supplement, not supplant, supplement every type of trading approach. Where's the volume? And volatility. And I'd even add the third, which is understanding basic trend behavior. Not trend as an up and down, but market trend or market phase or market cycle or whatever word you want to use. Those 3 things really will add to every kind of trader's approach: volume, volatility, and what is the underlying market behavior: up, down, narrow sideways, choppy sideways. And volume is such a powerful thing that it kills me not more traders so many traders know time and day based volume, but not price based volume. They know the horizontal look of it based on time, right? But they're not necessarily looking at the price based. Absolutely. Price based volume is and has been sort of a not so secret weapon for me for the better part of 15, 16 years. Follow up to that is, how do I view the market maker decision making when pushing the market? The market maker decision making. I don't know what that quote is from, Zane. I don't give it a second thought. I really don't. Size. You kind of answered the question, my friend, which I love. Size. Anyone, market maker, specialist, hedge fund. Size. So I mean, like liquidity tests, then continuation or reversal behavior. Zane, I don't even know that I understand what any of that even means. I don't pay attention to it. Size will tell me what I need to know. The dominant trend will tell me what's most probable. And then I wait for a setup. So I know a lot of folks are consumed with market makers and what they're doing and things like that. And I'm not saying that's not powerful. I'm just saying I don't use it because I do believe, based on volume and volatility, I have a pretty good idea what they're doing. It's already mixed into the analysis that I'm doing. So I really don't know. And I don't have any viewpoint on that. to be quite frank. But thank you for the question. And it just brings us back full circle to, my friend, watch the volume. You already know. That's what's so cool. You already know. I can tell you that. You already know, because ultimately what you're seeing is size, and size pretty much decodes everything, right? Okay. Very, very cool. Let's see. Bernie says, I see 300 plus. Yeah, we usually have 400 watching the live stream. I am so grateful to each and every one of you that take the time out in your morning to start it with us here at Simpler and our pregame show, Charts and Coffee, Caffeinate and Dominate. Gang, I will see you all on Sunday for the weekly Raghee report. We're going to kick off a new month, a new week, a new quarter. Very, very excited about that. And just I'll touch on this real quick, Dave. Watch them both. I just have found a lot more accuracy personally with the EMA. But I'll tell you this: it's good to have both. It's good to understand where both are at, because SMAs are still wildly popular and probably more mainstream. I think EMAs I have found to be, for myself, more accurate. Okay, gang. I'll see you Sunday. Thank you as always for the questions. And thank you. Yes, Bernie, smash that like button. I appreciate that. If you have any comments, questions, feedback, requests, just want to say hi, have a favorite symbol, leave it in the comments below. I'll see you all on Sunday. Be good to each other, gang.